Hello and welcome to another episode of Mortgage Chicks with Hot Tips. I'm Elizabeth Hole.
I'm Stacy Van Skank.
I'm Cindy Walker. And I'm Kim Hairstead.
Today we have a special guest to help us talk about credit. Doug Swan with Sarma. We'd like to say thank you for joining us today, Doug. How are you?
I'm doing great. Glad to be with you. Glad it's Friday.
Amen, brother. Well, this is a very big subject, so we're going to try to keep it really to the core questions. But what makes up a credit score, Doug?
All right. So we're probably talking about the mortgage credit reports, and there's about 5 things that make up basically the mortgage credit report. Okay. The biggest one would be your payment history. All right. How you're making payments. Are you making them on time? That is 35% of your credit report. Okay. The second one is the amounts owed. How much have you may be paying on time, but every trade line you have, has a, if it's revolving, it has a credit limit. Installments, it is what it is every month, but you're right at the, high balance every time. You're only making minimum payments. So that could come into play. You paying down your accounts, or are they staying the same? That's 30%. The length of credit history, they like to, have longer trade lines, know that you're established. You don't want to have only 10 trade lines that are within the last, 6 months to a year. They want you established over time. Again, you're younger, you won't have as established as trade lines to start with. But as you get more and more, then you get more stable. The scores can go up. So that's 15%. Then the credit mix, basically they call it credit mix. So that's how many installments, revolving accounts you have, mortgage accounts, student loans. Is it more revolving accounts because you need money, looking for money, credit cards? That can make an emphasis on your report, and that's 10%. And then you also have your inquiries. So inquiries, anytime that you go to make a purchase from someone and they can offer you a purchase, they look at your credit report, and every time they do, it's an inquiry when they pull your credit report, okay? So inquiries stay on your report for 2 years, and they are also 10% of your credit report. So that's basically what's making up your credit report.
Wow, so it's a good mix of everything. People think just I make my payments on time and my credit should be 800, but that's not always the case.
Wow, yeah. And I thought inquiries, I had no idea 2 years for inquiries.
That they stay on there.
So we learn something new every day.
Just the inquiries on your side, mortgages, just because we're kind of into it right now, just a little bit. So, you don't want to have too many inquiries. However, for mortgages, that's going to be your biggest probably purchase you make in your lifetime, or one of them.
Yeah.
And so they want you to be able to go out and look or kind of shop mortgages until they get to the right one, like Van Dyke. Okay. So what happens is for mortgages, within basically 30-day time, if you go out and go to ABC Mortgage, ABC Bank, Credit Union, they all pull your credit report, but because they want you to be able to shop, it only counts within a 30-day period, basically, as one inquiry. So if they come to you and say, hey, I don't want you, Elizabeth, to pull my credit report because I just had it pulled by, Wells Fargo, you can let them know that as long as within 30 days, it does not hurt their score, and you'll be able to get them a better deal probably.
Hey, Doug, what do you think about these credit boost programs? And in your experience, do they help? I mean, they're advertising it on the commercials, on TV, Credit Karma. Like, what do you think? What's your feelings on
Talking about the programs like maybe like Experian putting on their trade lines through them, like their utilities and things? Is that kind of what you're saying? Yeah. Truthfully, I thought that may come in that it could help, but I've done a lot of simulations of basically taking those off when they've gotten on there, and I've not seen the score go up 1 point.
That's what I was fearful of and thought.
It may help you being the lender more, but on the score side itself, tried paying them down, taking them off, and I've not seen any adjustment whatsoever as of yet. So I think that'd be more to help your underwriter maybe or something on a thin file. Now, the Credit Karma you're talking about, I think that was even one of your questions. I hope I'm not going too quick is the Credit Karma. So what happens is a lot of times people don't realize that we have a mortgage credit report in the industry, that it's just for mortgages. The models for all three bureaus have to be used in this mortgage industry. We can't use other models, okay? So what they probably do most of the time, and you probably hear about it when you pull the report, is they get consumer credit reports from the bureaus. You can get them once a year for free, different things like that, okay? Credit Karma is another one that you can get for free. And you've probably seen more often than not, those scores are always higher than the mortgage scores.
For sure. Yes.
Without a doubt.
Yes.
So they're saying, well, how can that happen? Okay. A mortgage report, they say, is made up of like 360 characteristics. I stopped after like 10. I'm not smart enough. And they put different emphasis on each characteristic or different things for each kind. Because there's a report for autos, finance, mortgages, consumer. So they're all a bunch of them. Okay. FICO's the one that developed the scores, but they're scorecards and they put emphasis on different things. So that's why scores are different between the different models. Why they have the mortgage models, of course, you'd rather have the higher scores, right? But unfortunately, we have to go by these models, and mortgages are usually lower. So your clients probably come to you and said, hey, I got a 680 or 700. And you're like, no, you probably got about a 640 or something. I mean, I've seen 50, 60 point differences.
Yes.
Yeah, we have too.
Yeah.
So they can get frustrated, but that's why maybe you can, at that point, hey, that's why we need to pull your credit reports. We can see on the mortgage side what it really is. So I can go from there to help you to see about getting approved or a better rate or something.
So Doug, when we're paying off our credit cards, what's the best rule of thumb every month? Do we pay them all the way down every month? Do we leave a little balance?
Yeah, that's a good question. Very good question. So what it is first of all, they want you to keep about 2 to 3. They'd rather you have 2 or 3 credit cards and under 30%. Okay. That's kind of a rule of thumb. However, if you're not going to go out to make a purchase of a mortgage, a car, or something like that, I would just pay them off each month. However, like for mortgage purposes, and if you start talking to people, you'll find out on the revolving side that if you pay them all off and at the time you pull that credit report, they're all zero balances, that could actually lower the score.
Right.
You need to keep at least one with a small balance to get that score back up. So on general, they don't want you to have too many, but they like you to have 2 or 3 under 30%. But if you're going to look to try to get the client scores the highest they can be for mortgage purposes, always let them know it's always better to have a small balance on at least one of the trade lines.
Good info.
Yeah, I have a co-borrower that she has only 2 scores. She has 2 credit cards, no balances on them, so the other bureau doesn't even give her a score.
Yeah, that's good. That's and I don't mean go where maybe you don't want me to go, but here's another thing is on all the consumer reports, as soon as you have a name on that report, basically you're going to get a score, some kind of score. Okay. But on the mortgage report, there are requirements to be able to get the score. You've probably come across, like you talked just now, that you didn't get a score on someone. So what you have to have for a mortgage report is you have to have at least one open trade line. You have to have at least one any trade line that has at least 6 months of history, and you have to have at least one trade line that's been updated in the last 6 months. Because I can tell, I get calls every week about, hey, this guy came in with a Credit Karma, blah blah blah, 650, and you don't even get a score. So they are young, or they just use cash a lot or something. You have to have those requirements you have to have to be able to get a score. So, all right, well, how do you get a score then if you're young or if you've only been paying cash a while? Well, if you order or open up a new credit card, that's great. Thing is, it takes about 3 months for a credit card to show up on your credit report on average. Okay. So if that's the only credit card, you still got to wait 3 more months. But if you had a trade line that had 6 months in the past with history, then once this credit card hits, then you'll get a score. As long as you had one that had 6 months of history in the past. Okay. But let's say, for example, you have the credit card, it shows up, it's still only 3 months. How do you get a score? I mean, we need to get these people approved or something. The best way to do it, and you've probably used this a lot, is get them on as an authorized user with a friend or a family member.
Yeah.
The reason I say that is because it only takes about 1 month to show up on your credit report. And as long as it has those 6 months, then you'll get a score. So it would only take about 30 days for you to get a score for that client.
Doug, so can you explain, we hear this all the time, what is the difference between a hard pull and a soft pull?
Yeah, that's a good question too. And it's and it's coming more prevalent now, it seems like, having more people do the soft pulls up front. Is a hard pull report, again, is when you have someone in front of you and you're going to offer them a mortgage or whatever industry you're in. You have to be able to offer them if they're approved for, car or mortgage or whatever. A soft pull report, it's basically the same on the mortgage side. It's basically the same credit report as a mortgage with a score, but it's a soft inquiry, which means you can use it for pre-qual purposes. We have to get certain codes from the bureaus so that you can pull these soft pull reports for pre-qual purposes. Now, some of the reasons you may want to is, someone's come to your office and talk to you and say, I'm kind of rough on the credit side or something like that. And you don't want to go through and pull a whole new tri-merge. You could pull, a one bureau report, for a lot less money. Okay. $5 or whatever it is. It doesn't count it doesn't count anything against their score. It's soft. It's only for pre-qual purposes. And we call it like a consumer inquiry. So on the credit report itself, you will not see an inquiry that Van Dyke pulled on this person because they pulled a soft pull. Now, that person, if you know how you can get a copy of your free credit report once a year with one of the bureaus or something like that. If you get a copy from the bureau, they have, and you say, hey, there's my credit report. Oh, wait a minute, there's that inquiry. You see all the soft pull inquiries on your credit consumer credit report. But on the regular credit report, it does not hurt the score whatsoever. Okay. So soft pulls too, besides like you pulling them for pre-qual or something. For example, you get rooms to go, pre-qualified for $5,000 in your mail or something like that. They had done basically soft pull report on different information they gave to the bureaus to come up with that report. So if you look at your consumer report, you probably have 50 to 100 inquiries you never knew you had on the report.
Wow.
Soft pull doesn't hurt. Yeah.
That's
Now,
definitely
with a
interesting.
soft pull, can you run DU to see what the findings are in order?
No, unfortunately, you can't. Right on the first page of the credit report, it says invalid, and DU and LP would spit it back out at you. So you have to have a different code and password, basically a different system. So right now, we have it getting set up. Jeannie had me set up soft pull reports for whoever wanted them in your with Van Dyke. So anyone that contacts me, I set them up and I show them how you have a different username and password and you can pull it right off the website. Okay. So it's available to you whenever you would like it.
Yeah, I've been doing those, and I think the advantage also is that they're not getting bombarded by the bureaus selling their trigger leads out, so they're not getting bombarded by other lenders.
Yeah, so what happens, she's talking about the trigger leads is, oh boy. So the credit bureaus, it used to be months, then weeks, then days. Now it's within seconds. They can see when any inquiry, because they give us all the codes for mortgage companies, as soon as an inquiry comes out that your mortgage company pulled someone's credit report, they are bundling those up and selling them to other mortgage brokers. So if you had someone, now you usually do everything over the phone, but if you had someone come out to your office and you did the credit report, by the time they got home, they may have 4 or 5 voicemails from other lenders out there going, I can beat their rate.
Right.
We think it's totally wrong, those trigger leads, because credit bureaus are selling them to us. We sell them to you. Now once you pull them, now they're taking those and selling them to someone else to try to take it away from you. And what they're saying is, we're not doing anything wrong, because they say that you can opt out of having anyone call or send you information to buy things. So, well, that's great. Let's have our people, just opt out. Problem is, when you have someone opt out right now, it takes about 4 or 5 days for that opt out to take place. So, you really don't have a lot of, 4 or 5 days before you can pull their credit report, or, a lot of time they're going to move on somewhere else. So.
Right. Well, this has been a lot of great information, Doug, and I know that we could talk for literally hours about credit. We just wanted to kind of touch base with some of the top few questions that we hear a lot as loan officers. We'd like to thank you so much for coming on here today, and I'm sure we'd like to invite you back for maybe Credit 102.
Yes.
Yes, we love it.
Amen.
I probably talked too long, so I won't talk so much in 102.
We appreciate you,
You
Doug.
are wonderful.
Thank
Thank
you,
you for the
Doug.
important information, Doug. You have a
Y'all
great
have a
day.
great weekend, okay?
Okay.
All right,
Thank you.
thank you, sir.
Bye.
Don't forget to listen to us on where you listen to your favorite podcasts.
And if you have any questions or suggestions for upcoming podcasts, please send us an email at mortgagechicks@vandykemortgage.com.
Please follow us on Facebook at Mortgage Chicks with Hot Tips.
You can also follow us on YouTube at Mortgage Chicks with Hot Tips.